Should you use an 8% stop? For whatever reason, somehow in the trading world, you will see that 8% popular stop has become very popular. And if you use an 8% stop, you are likely to have a lot more drawdowns. Especially if you're going to be swing traders, try and find setups with smaller stop than 8%. I try and operate with a very close stop. I try and operate with the close stops up as low as 2.5% on many of my trades. Now, how can you reduce your stop is something which you have to think. 8% according to me is really for position traders. If you're a position trader, you put 8% stop, that's good. Or I would even as a position trader try and find a setup where I can put a closer stop. Always remember that trading skills or age is in finding situations where you can put very close stop and the setup works. So here is the thing: how can you reduce your stop to levels which is not 8%? And in order to reduce your stop to a level where it is not 8%, if you do more anticipation, if you operate from a watch list, and if you do more pre-work and you're operating from a watch list, and if you get into a setup early, which is the key really is to enter a breakout or enter any setup very early as when it is starting to break out. If you can do that, then you can get away by putting closer stops. And there is a great advantage in putting in closer stops. If you put in a closer stop, the stock has to move a little bit for you to have a break even on that trade. And also it increases your profitability, it decreases your drawdowns. So before you start accepting this common wisdom, which has been popularized in the trading world of 8% stop, which is like universally 8% stop, but 8% stop for what setup? 8% stop for what is your expected profitability? That is the question which you should be asking. And your objective should be in trading to keep reducing your stop levels and try and operate half of 8%, 4%, or even lesser than 4%. And if you can develop that kind of an attitude and develop that kind of an expertise, develop that kind of a setup, you will make a lot more money with a very low risk. So let's look at some of the trades which I did and with a very close stop, right? And so here, like this Oxy is an example of a trade which I did on this day. And because it was setting up very nicely, I was already watching. But the way I generate signals also, I got into this trade in the first 10 minutes. Okay, or within the first 10 minutes. At that time, the stock was up just $1. So because the stop was up just $1, I put in a stop of $1, which is the low of the day, right? So on a 38 or a $39 stock, right? I put a stop of say $1 on a $39 stock. That's 2.5%, right? Here is a trade which I did that day in a phase last week, right? In this particular trade, my entry on this particular day, again I was watching this particular stock, and as soon as it started showing a breakout, I was early in this particular stock, as early as 162.46. So if I get in at 162.46 and my stop is $1, right, which is typically what I operate on, so $1 on 162.42. 162.46 is even less than 0.61%, right? And that is the kind of things which you want to find buy points where you can put a stop which is very close. Nova is an example of a trade which I did last week. In this particular trade, I entered later in the day, closer to the close in the last 15-20 minutes, and I put my entry was at 21.02, but I put a stop at 20.50, so that was around 0.52 cents on a 21.02. It's 2.4%, right? And those kind of stops, if you put in, then you can make the stock went up 18% next day, right? And the stock went up 18% next day. So your risk to returns ratio increases significantly if you can reduce your stops. In order to reduce your stop, couple of things which you need to work on. One is the anticipation. If your watch list is good and you're watching and you're not waiting for confirmation, like a lot of people wait for a volume confirmation to buy. If you wait for a volume confirmation, the cost of waiting for a volume confirmation is going to be, your stops are going to be wider. Okay. Second, if you trade very low price stocks, if you are going to be trading stocks which are priced at $3, $5 or less than $10, then you will need a stop. Not even 8% stop is going to work on those stocks. On those kind of stocks, you'll need 10, 15, 20% stop. If you trade higher price stocks, the higher the price stock you are trading, most of the cases you can get into them with a very low risk stop. You can get into them with a 2% or less than 2% stops. If you look at stocks which are higher priced, like say if you look at something like AutoZone, when it breaks out with what? It breaks out with 2.25%. So on a 2.28% breakout, do you need a stop of 8%? No. Right? When it breaks out with 3.40%. Do you need a stop of 8%? No. So this 8% stop is another one of those commonly passed on knowledge. For whatever reason, it was popularized, and it continues to be popularized by people who are not thinking through. Because for 8% stop, if you are going to be putting in, you need to make 25%, 30% for it to make sense. If you can bring it down to 3%, 4%, half of that if you bring it down, even a 10%, 20% move, 10% move is going to be 2.5 times your risk. If you can bring it down to 3%, a 10% move will be 3 times your R. If you can bring it down to 2.5%, 10% move will be 4 times your R. So work on reducing your stop and don't take this gospel truth like 8% stop. I just don't understand. Like so many people come to me and say, I'm putting stop at 8%. Why are you putting stop at 8%? Because everybody is putting stop at 8%. So everybody is doing foolish thing. You also want to be one of those person doing foolish things. You're not going to make much money. Try and find setups where you have very close stop. I try and look for setups where my stop can be 2.5% or less. Now that is why I trade high price stocks. That is why I spend a lot of time in finding anticipation setup. Even when I find an anticipation setup, I only look for anticipation setups where they are up or down less than 0.4%. Something which is up or down 0.4%, when it breaks out, even if it breaks out by 1%, that's a breakout on that stock. You can get in early, you can put a close stop. So this thing is an important way to improve your profitability and also to decrease your drawdowns. Again, this is not easy. It requires skills. It requires you to identify set of conditions where it is possible. It requires you to enter setups early. Sometimes when you enter early, you will get stopped out, but that's okay. But putting 8% stop, that's for people who have not thought through their stop strategy.